Looking at your local market, we have seen the JSE trading in the red today. Of course, quite a lot that investors were digesting, particularly on the monetary policy side. We did have the Fed, they're coming out with its interest rate decision last night, cutting interest rates by 25 basis points. And of course, investors now sifting through the comments from Fed Chair Jerome Powell about the interest rate outlook. Also having the Bank of England coming out with its monetary policy decision, keeping rates steady, and so did the Bank of Japan, keeping rates unchanged. We are seeing a sea of red on that front, the all share declining by almost 1.5%, that being largely carried by the Resources 10 complex with a slump of 1.68%, the Financial 15 down by almost a similar margin, Industrial 25 there giving up almost 1%. And join me with more insight on those moves is Odwa Msngwentshu from Momentum Securities. Thank you so much for your time, Odwa. Looking at how the markets received the Fed seems not so well. Of course, as expected, we did receive that cut, but really what was in focus was the tone from Fed Chair Jerome Powell. What did investors get out of that?
Well, it just dampened the outlook in terms of the cuts that I expected. As you said, we were expecting a 25 basis cut, and we got that. And the only thing that changed this time was the forward trajectory. Now only looking at 0.5% cut in the next year, and that's what dampened everything. And they did state that they are still looking again to be data-driven in terms of determining whether we are going to see more cuts or more aggressive approach. However, right now, even though inflation is still under control, I think similar to the United Kingdom, you don't want to rush the cutting of rates.
Oh yes, because I was going to ask on the Bank of England if it's also confirmation of the kind of cautious approach that we are seeing from the central banks. Then quite interestingly, we also did get inflation out of the UK yesterday for November, quickening from October, but still in line with expectations. So can we expect more caution there as well?
Oh, 100%. If you look at the dot plot, we see a vast majority looking at staying as is right now in terms of not making any cuts. And it's just a cautionary tale of not, jumping the gun as you may. With regards to the interest rates, the worst thing I would assume is to have to increase interest rates again. And that's not something anyone wants at this point in time.
All right. Well, let's go into some of the company news that came out of the JSE. Grindrod coming out with the pre-close trading update there. They start off by listing macroeconomic headwinds, particularly in the dry bulk commodities front, but also talking about the disruptions from the political turmoil in Mozambique. Of course, we did see a softening in some of the metrics there, but looking at it overall, it would seem that the numbers aren't too bad. Would I be correct, or maybe just yeah or not?
I believe it's correct, or a correct assumption to say that the numbers weren't bad at all. We were expecting some disruption in the numbers, especially with civil unrest in Mozambique. However, if you the Mozambique investment that Grindrod has made has actually given them quite a nice injection in terms of cash on that front. What did seem to be a matter was, for example, the South African railways. So there's still that issue there, which is hurting that business. However, demand for the logistics business still remains strong. However, the logistics side did suffer quite a bit. Where I saw some good news is on the debt and the balance sheet there, and that front it's looking very good. Net debt very low, which gives the business a lot of workaround for the future.
Well, talking about balance sheet, that's definitely something that Sibanye-Stillwater is trying to stabilize. We saw that they entered into an agreement with Franco-Nevada there, where they would be getting 8.8 billion rand in exchange for their gold and platinum streams. Just talk to me about what this deal means for Sibanye.
Well, as you said, it's upfront injection, a cash injection, which is much needed right now for Sibanye, and it helps them just to operate a bit more, reduce their debt on their balance sheet as well, and it just gives them the business, the partnership they've gone into just gives them a cash injection, no debt responsibilities as well. So it's just free cash quote unquote, for now.
All right. Well, before we get to your stock pick, I don't know if you got a chance to look at Eskom financial results there, posting a bigger loss, but expecting to return to profit in the next financial year. Are the lights finally coming on here?
It does seem to be the case, especially with their projections. It's going to be the first time since 2017 for the business to be in the profit, and that is a benefit. And I think they have done a lot in terms of this turnaround strategy, with a new board coming into play, and also when they were renewing the prepaid meters, they managed to find a few delinquent payers there, which then that helped in that regard. What is still a worry is the municipalities, which are in debt to Eskom. That's something that will need to change. However, it is, as the saying goes, a light at the end of the tunnel.
All right. Well, talking about light, what is your stock pick for today?
Mine is African Rainbow Capital Investments. The business has just gotten into a nice joint venture with New Bank from South America. Expertise are also going to be shared, just not funds as well. And the business has two major investments, being Time Bank and Rain, are growing quite aggressively, and that is something to put in your portfolios.
All right. And we have seen that share price there trading in the green for the third straight day. Thank you so much for your time and for your insights there, Odwa. That was Odwa Msngwentshu from Momentum Securities.